look at this. Cloudy day is here. Early, bright and early. I'm a little late, but you're a little early. Cool beans. Look at all the people showing up today rather than going out trick-or-treating. Works for me. Anyway, as we get this, move this light a little bit. That make a difference? That don't make much of a difference. Yes, it does. That one right there. Okay, that's cool. Not very much brighter. Stop recording. Here we go. And here we are. Woohoo! Alrighty. Let's get started. Some of the comments in the live. Time to make some money. Baltimore, how are you doing today? Hello, my name, Mingus. Jay, your residence. Good evening, sir. Good evening to you, too. Ticey Fitness. Minimin? That right? Minimin. Minmin. Oh, Minmin. Seth. All right. Apple update settings. No, I don't need to update. I'm good just the way I am. Okay, all these things crooked. Here we go. All right, this way? Nope, this way. All right, cool beans. Calvin Hill's here, cool beans. All right, let's get started. First off, my name is James. Good evening, everyone. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Okay, the 10-Minute Trader. That being said, I am here to show you how I invest in dividend stocks for weekly cash flow for a safe, predictable, consistent 1% per week. Did I make it easy? Duke, how are you doing today? What's up, dude? What's happened to you? All right, let's get started. First and foremost on the list, we can go through some of the stocks that we've been picking up over the week and see how they look. First on the list is going to be Sony. Sony, really? I don't really like Sony because it's a little choppy. Look at how choppy that is. Look. Space, 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 space. Look at all the spaces. Yeah, I'm not too fond of Sony. But anyway, Sony is going to be a no. Yep, big drop today. Lost $70 on tech today. Duke, I have no idea. Tomorrow we're going to hurt? Don't know. Tomorrow's Friday. Friday, options expire. Buy the dip. Absolutely. Why not? Now, see, I don't really play that game because I buy a dividend stock and I hold on to it to catch a dividend. If just so happened, I can sell a covered call against it and get a little bit more money. Here's the thing. Most people buy dividend stocks. Let's get this out of the way. Dividend stocks, see all these little green dots? Those are the dates that these companies are actually playing. Got General Motors options now. Nobody here. Cool beans. What an interesting name. Okay, so love the dip. Here you go. Jay Sheriff. Is that your last name or are you actually a sheriff? Rick Barry. Okay, so each one of these green dots represents a company that pays out a dividend. Now, I like dividend stocks, and here's the main reason why. Because a dividend stocks, the companies actually share their profits with the investors, and that's us. We are the investors. So if we buy dividend stocks, we are basically sharing in the profits of the company. You're a sheriff, cool beans. Have I got a deal for you? I believe in supporting the the boys in blue. I don't know if you wear green or you wear gray or you wear black because some sheriffs all over the place wear different colors. I know the sheriffs here wear dark green. The sheriffs up in New England we're like a gray and blue. Club Med Tom, what are the potential scenarios that you are monitoring and which ones require action? That's a good question because I have some Estee Lauder. Estee Lauder took a big dip. I haven't looked at a single thing today. Well, I looked this morning because we have a podcast in the morning. Oh, your name is Sheriff. So are you actually a sheriff? Law enforcement type sheriff, or you just name sheriff? I don't know. That'd be funny if you named sheriff when you were a criminal. You rob banks. I'm sheriff. I rob banks. All right, are you going to buy Walgreens? Very cheap right now. Okay, Chris, I actually own Walgreens in about 4 or 5 different accounts. I'm not going to be buying any more. All right, Friday, options are going to expire tomorrow, so we get a couple of questions. What are we going to do about tomorrow? I like 10% dividends. Okay, now, Chris, is that for week, month, year, quarter? Don't know. Can you show examples of doing a trade selling covered calls if you already own the stock? Cloudy day, yes I can. All right, let's take a quick look. First off, let me explain why I like dividend stocks. Now, there's 9,700 and you know what? We haven't looked in a week, so let's actually take a gander. FinViz, because the number changes every week, believe it or not. Okay, FinViz, here we go. Now we want to take a look at the screener, and the only number I want to take a look at is this one right here. 9,739 companies. Okay? Okay, 9,739. So let's find out how many actually have dividends. $5,501. Okay, so 9,700 different companies pay dividends. No, sorry. 9,700 different companies in which we can invest in at any time, but only 5,501 companies actually have dividends. So half of them have dividends, the other half do not. So I'm not here for capital appreciation. I'm not looking to buy a stock and have it slowly go up. No, that's not what I'm looking for. If that's what you're looking for, you're in the wrong place, because I'm looking for cash flow. When I say cash flow, I want a dividend stock, because with a dividend stock, see all these little green dots? They all represent a dividend date. Okay, on a dividend date, they pay out a dividend. So why do I have it on a calendar? Well, because before they pay a dividend, let's give you an example. Procter & Gamble. Okay, we all know who Procter & Gamble is. Procter & Gamble goes up in value just before the dividend. So if the dividend is on the 18th, I want to buy it 2 weeks before. Okay, give it plenty of time to make a move. So stocks only move for two reasons. One, a known reason. Two, an unknown reason. Well, what's an unknown reason? Well, death of a salesman, death of a key employee, a tsunami, an earthquake, a flood, a thunderstorm, a hurricane, anything natural disaster that you cannot plan for. The Exxon Valdez, when it crashed in the Northwest and spilled all that oil all over the place. Nobody knew that was coming. And the Gulf of Mexico, British Petroleum sprung a leak. Nobody knew that was coming. Anytime a major disaster, or how about a major lawsuit? Okay, major lawsuit, that will affect the stocks also. That is what's called an unknown event, something you cannot plan for. Now, what's a known event? A known event is a dividend, is an earnings report, is a seasonality. What is a seasonality? Well, winter, spring, summer, fall. Okay, Weight Watchers stock goes up at the beginning of every year. Hershey's goes up at the beginning of every February. Okay, certain stocks move predictably throughout the year based on an event specific to them. All right, that's called seasonality. So there's only two ways of looking at it: a known reason and unknown. You can't plan for an unknown reason. They just pop up and you got to react to it. Okay, we all don't have the ability to drop everything and react just to news. But we do have time to plan out making a play off of a dividend, or how about in earnings? Okay, these are all earnings coming up. Now, I particularly don't like earnings because I've seen positive earnings where the stocks go down. Estee Lauder had positive earnings, stock went down. Harley Davidson had positive earnings, stock went down. Yeah, so I really don't pay attention to the earnings. I like dividends because dividends are more consistent. They pay every single year, and the stocks that I like have increased their dividends for minimum of 2 decades. So that's 20 years. Okay, great. So if they've been increasing their dividends for 20 years, more than likely they are profitable, because a dividend is a portion of the profits. So if the dividend increases, well, more than likely the profits are going to increase. Well, because you can't increase your dividend unless your profits are increasing, because the dividend is part of the profits. All right. Holy cow, we just lost half our audience. Well, is what it is, I suppose. Okay, so I like to buy 2 weeks before the dividend date. It gives the stock plenty of time to move. Once it makes that move, great. I jump in, I get my 1%, boom. That's 50% per year. Okay, I'm looking for a simple, safe, predictable, consistent 1% a week. That's over 50% per year. So let's take a look at some of the stocks that are coming up for consideration. Now, what does that mean? Well, they got a dividend coming up, or they look good, one or the other. Okay, so we looked at Sony, ExxonMobil. I like ExxonMobil. I trade it every quarter. Why? Well, because they've been around for over 100 years. All right, here's the high, here's the low, here's where it was, here's where it is. Look, down, up, down, up, down. It's currently at 116.99. That's 117 is going to be the closest strike price. The 117 is going for 247. That's over 2%. I like 2%. But is it the right time to buy ExxonMobil? All right, a year ago, let's move this over a little bit. A year ago, ExxonMobil is at 105. Drops to the bottom of the year in the middle of January, and that was 95.42. She goes up, channels sideways for a bit, and hits the high just a couple of weeks ago. Well, here's a 30-day high right here on the 7th of October. Look at that run up. Here's the 30-day bottom. A week later, there's the 30-day top. What happens there? Well, you got some profit taken. Yesterday is a new bottom. Today is a little to the upside. I like 2 days to the upside to isolate a 30-day bottom. You can't miss it. Here's the top. Here's a 30-day bottom. She shoots up. She drops. Now she's going to start going back up again. Well, at 116, 117, let's see what it looks like. Now, I like the 117, so let's actually do a trade, see what it looks like. That way you understand how it's supposed to sound and how it's supposed to look. So let's go and do the 117s. First of all, I want to change this right here where it says spread. I want to change it to a covered stock. That means I'm buying the stock first and then I'm selling the option to someone who wants to buy it from me and hopefully get 1% or more. Well, we're going to do one and see exactly what it looks like. Okay, so the 117s are right here. Now a strike price. I missed it. Damn it. 117. Here's the strike prices here. Okay, so let's buy it and see what the numbers look like. I missed it again. Damn it. All right, now let's just do 100 shares, one contract at the market. And what does it look like? Here's what it looks like. Buy one covered call on ExxonMobil. Okay, 100, those are the weeklies. 8 November 24. That's next Friday. Mahesh, thanks for that, brother. That's next Friday. The 110 call option against the stock of ExxonMobil. At the market price to open, the break even. What does that mean? The break even point. The break even is anything over this number is going to be a profit. Well, the break even is 14.22. Well, currently the stock is almost at 117. So anything over 114 is going to be a profit. Okay, great. Now, here's my profit per contract. $277.50 for each contract. One contract, $277. 10 contracts, $2,700. So on and so forth. All right, so get my calculator out. 277.50, and what is it costing me for this 100 shares of this stock? Well, 11,423. 11,423. That gives me a rate of return of 2.4%. But the big question is, do I like ExxonMobil at this current price? Well, let's take a look at the seasonality. Now, what is the seasonality? I talked about it a little bit earlier. So what exactly is it? So let's take a quick look. Get rid of all this stuff. Bring this all the way over here. And then we want to go right to here. And we want to take a look at the seasonality chart. Now, the seasonality chart gives me a good idea of how the stock normally moves. So if the blue line represents this year, all the way to the left is January 1st, all the way to the right is December 31st. Okay, so the blue line represents this year. This little blue dot right there, that's today. The red line down here, that's what the stock normally does. Now, look very closely right there, okay? In the middle of August to the end of the year, a nice upward trend. So if you buy ExxonMobil smack dab in the middle of August, she has a nice tendency to go up for the rest of the year. Well, that works for me. Holy shit, I got 99 questions already, and we're only half hour in. All right. So basically, we're just going to go to the upside for the rest of the year. All right, I like ExxonMobil. That's weird. What the hell did I just do? Yeah, I don't buy that. I wish I knew anybody who used that monkey bars thing, because I have no idea what the hell it is. All right, so let's take a look at some of these questions. Okay, cloudy day. It's going to be hard for me to show you, only because I don't have any stocks that don't have options against them. Hello, James. What's the potential? Okay, we already talked about that one. Yeah, your last name is Sheriff. Okay. For Friday, okay. Are you going to buy Walgreens? I actually already have Walgreens. Chris, you like a 10% dividend? Cool beans. What you can you show an example? Okay. Okay. So if I'm going to do, so let's say hypothetically I already owned ExxonMobil. If I want to do a covered call against it, I would pick the strike price, whichever one, and always pick one closest to wherever you bought the stock, and try not to go below what you paid for it. So if I paid, 116, I want to go 117, 118, 119, 120. Okay, I don't want to go lower than what I paid for it. I don't want to go 113, because if it's above 113, whoever bought it is going to take my stocks away from me, and I'll be losing, depending, of course, how much of a premium I collect. All right, so I showed you how to buy it as a covered call, which is changing this to covered call, which changes everything. Well, let's go back and just go to single. So if you're just going to sell the covered call against it, if you already own the shares, you just click on that, and then you're just selling the option against the position you already have. Silver Wolf, how are you doing tonight? I hope that answered that question. Oh, well, yeah, let's try it again. There, and then we confirm and send, and then you just read it. Selling 10 contracts, ExxonMobil, 8 November 24, that's next Friday, the 117 call. If I already own the stock, I have no risk. All right, that being said, let's get out of there. Let's get out of there. Let's go back to here, and let's take a look at those some of those questions. We got 99 questions. Why do you have multiple accounts? Because I don't trust the government. If they come and seize one of my accounts, yeah, fine. Now, if all the accounts I have are in different names, how can they link them back to me, other than listening to my conversations here? All right, Chris, you talking about 10% per year? Brother, you're definitely in the wrong place. Or you could be in the right place. I look for a safe, predictable 1% per week. So 1% per week comes to 52% per year. So is that better than what you're doing? Alex, how are you today? Yeah, baby is here. How you guys doing over there on Instagram? All right, so that being said, Chris, you're new here, because I'm really good with names. I don't really recognize your name, so you're relatively new. If you are interested in more than 10% per year, just sit back, relax, see if this makes sense. That's the number one question you should always ask yourself. Does this make sense? Now, I'm not going to try to sell you anything. I'm just giving you free information and telling you what I do. I don't give recommendations. I don't tell people what to do. I will read the numbers, I will read the charts, and give you my interpretation as an entertainment value. I will sing, I will dance. That way I can't get in any trouble, because it's only entertainment. It's not supposed to be, what do you call that? Financial advice. No sound on YouTube. No sound on YouTube. Oh yeah, he's right. There is no sound on YouTube. Okay, let's get rid of that. Let's get rid of that. Let's go back to here. Let's go back to audio input. Audio input, okay. And we want to use hello, hello. Nope, that ain't it either. Oh, wait a second. Hello, my friends. Nope, that ain't it. Okay, let's get rid of that one. All right, let's do this, see if this works. Okay, got to get my receiver for my microphone. I hear no problem. Yeah, because you're on one channel on YouTube. There's 2 YouTube channels. All right, so let's put this right over here. Oh, come on. I got that virginitis thing going. Do you know what that is? I can't find the hole. That's a terrible thing to say. All right, that one's dead. Now this one was plugged in all day today. There we go. We've got the power. All right, so plug that one in. Give me 1 second, guys. I'll get this microphone working. Yes, okay. Audio input. Hello, my friends. Hello. I call to let you know. Hope that should work now. All right, I need 100 per week. How much do I need to invest? 10,000 bucks. $10,000 at 1% per week is $100. Okay? 100,000 will give you $1,000 a week. Okay? A million will give you $10,000 a week. All right. All right, let's keep on going. 10K. Mahesh, you got that right. All right, what do we got? Duke, Schwab. Yes, this is owned by Schwab. Good morning from PH. PH. That the Philippines? Pacific Islands? I don't know. All right, Mahesh, how are you doing? All right, let's keep on going. How many of these we got? Encourage more viewers to share. Yep. What about Comcast? CMCSA. Mr. Steal Your Things. Mr. Steal Your Things. Cool. Comcast. I like Comcast. CMCSA. Comcast. One of the things I really like about Comcast, if you think about it, it's going to be a no. Sorry, really quick. Did you like that? Quick, to the point, nothing, no exaggeration, no embellishments, nothing. See, look. We gapped up today and just kept on going. Okay, I don't buy at the high. Okay, if you like Comcast, you should have jumped into it last week. Okay, look at last week. Last Monday, here's your bottom. Here's 1 day the upside, 2 days the upside. That's where you should have jumped in right there. My humble opinion, of course. I'm not giving you advice. I'm just saying, when you find a new bottom, okay, you have to figure out what point is it into an upward trend. Me, I like 2 days to the upside. Okay, so here's a bottom here, 2 days to the upside, then she went up. Okay, bottom here, 2 days to the upside, and then she went up. Bottom here, 2 days to the upside, and then she went up. Okay, I'm only looking for 1%. So, here, yeah, it went up enough to make 1%. Here, it went up enough to make 1%. Look, and it's 1 week. Okay? Another week, another week, another week, another week, another week, so on and so forth. Okay, I'm only looking for 1% a week. It's simple, it's easy, it's quick, and if you do it right, there's no way to lose. Now, the way I created, let's go a couple more of these questions. We got a whole bunch. Well, this is just people just joining and coming and saying in. Okay, Duke, yeah, Schwab. Encourage more viewers to share. Nikki, how are you today? Yeah, you guys, like, share, comment. Yeah, don't do that. I have enough people to worry about. I want to go to bed early. Do you get taxed on dividends? Duke, when anybody asks me about taxes, I always tell them you really, really need to talk to a tax strategist or a tax planner. Somebody that knows how to set up your accounts so you do not have to pay tax. Coach Joel, how are you doing, Coach Joel? Back again, I see that. So if you are paying taxes and you don't want to pay taxes, there are ways you can trade in the stock market, make profits, make a lot of money, and not get taxed on it. Okay? It's not as easy as you think, but it is a viable option. You have to talk to someone to guide you through those steps. Now remember, I don't give advice, I don't give tips, I don't do any of that. But I can tell you, the answers are out there. Ooh, remember that from the X-Files? The answers are out there. All right, let's roll. What else do we got? Ooh, user 90021021164 wants to take a look at Altria. Oh, wait a second. Oh, so anyway, back to Comcast. Before I go to Altria, look at Comcast. Okay, up, down, up, down, up. Well, where do you think it's coming next? Oh, great. If you really like Comcast, this baby's going to drop. And when she does, we'll look at it in about 2 or 3 weeks, because I'm going to write it down for 2 or 3 weeks. That way, when she does drop, we'll be all ready to go. Okay, that's a week. That's 2 weeks. So we get CMCSA. First entry for 2 weeks out. All right. Altria. M-O. Hell no. Okay, see, if you knew it made a jump like this, why are you asking about it? Because when you get a jump like this, more than likely, there is going to be profit taking. Because think about it. Your bottom's down here at 49, and she jumps up to almost 55. So from 49 to 55, that is $6. Now, I know $6 doesn't sound like much, but $6 on a $50 stock is what, 12%? A 12% increase in 2 weeks? Okay. When you're investing, it's always good to know where your entry point is, where your exit point is. Without knowing where your exit point is, what's the point? You should buy it and just wing it? That doesn't make no sense at all. Okay, it makes no sense at all just buying something blindly and not having an exit plan. Having an exit plan is very important. That's kind of like jumping on a boat, going out in the ocean and just going. No direction whatsoever. That's like a ship without a rudder. That's what I was thinking, a ship without a rudder. You're going out and it's like, who knows where the hell you're going to end up. So Altria is going to be a no only because, look at this, down, up, down, up, down, up. And then she just gapped up and kept on shooting up. Well, great. But where are you getting out? And where did you get in? And did you even get in? Okay, why do you want to look at it? You want to look at it because it made a big jump today? Well, that's after the fact. That's playing Tuesday morning quarterback. Doesn't do us any good. Okay, so let's keep on going. What else do we have? What other questions do we have? Duke. Dividends are taxed except for Roth IRA. He's correct about that. No sound on... Wait a minute. We just checked YouTube. There's sound on YouTube now. Well, at least there should be. Oh, gotcha. Thank you. All right. Bam, bam, redneck. All righty. Hello there, dude. And how are you today? Bruner's in the house. Richie's here. Where's that lovely wife of yours, Richie? Okay, where am I? I miss them. Every once in a while, these things, the questions will get away from me. I can't even see them. All right, what are we looking at? Amy, trying the same option on Robinhood. I don't have the same price or date. Why? Amy, Robinhood is a little bit different than Think or Swim. Totally different setup. Okay, now I do have Robinhood, and I do trade options on Robinhood. Oh, we got an interesting question from someone new. Ryan Keys, are dividends taxed? Are dividends taxed if it's on a drip? Yep. Okay, now the interesting thing is not many people tell you how to set up your accounts. Most people set them up in their own personal name. That's a big mistake because it's a couple of reasons why it's a big mistake. Reason number one is you're taxed the maximum amount. Okay. unless it's, of course, it's in an IRA. Well, it's in a Roth IRA. Well, the tax are delayed. Okay, so they're going to tax you eventually when you get that money out. All right, but anyway, setting up your account is very important. Now, I can't tell you how to do that because I know nothing about any of you, but there are ways of setting up a trading account where you don't have to pay taxes, and that's where a tax strategist or tax planner comes in. I have questions about, let me say, being the next goal. I have no idea what that means. All right, can you tell what software you are using on your screen? Captain Trader, this is not a software. This is a trading platform called Think or Swim. It was created by Tom Sosnos. He's the one who does Tasty Trades. Okay, he created it 20, 30 years ago. Can you look up AAL, American Airlines? American Airlines. Interesting. It's going to be a no. The reason why it's going to be a no, because look at it. Okay, up, 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 up. See, imagine this, if you will. Okay, imagine standing on a ladder, on the top of the ladder. You know, that last step where it says, do not step. Okay, do not step, do not sit. You know, that part of the ladder right there. Okay, imagine standing on that, waiting for someone to bring you a taller ladder. It's at the high. Where the hell do you think it's going to go? There's no guarantee it's going to go higher. You have 1 in 266 chance of it going higher. Well, because there's 266 trading days in a year. Only one can be the high of the year. Only one can be the low of the year. Well, currently the high of the year is yesterday. Today is lower. It dropped down today. More than likely, it will probably drop down tomorrow. Because if you think about it, the people who bought way over here, okay, 950, 970, 990, 10, 1020, 1050, whatever, here. And then it keeps on going up to 14. Well, I know it's only a $3.50 increase or a $4 increase, but a $4 increase on a $9.50 stock, that is just that much shy of 50%. Half. Okay. 9.5. It jumps up $4.50. Okay. $4.50 is a little bit less than half. That's a 50% increase in 30 days. That's crazy and a half. Wait a minute, that's more than 30 days. That's 60 days. 30 days would be right here. Down, look, 2 days the upside, and it keeps going up. Crazy. Okay. You got to give me something that doesn't have big jumps. Something that actually looks like it's a possibility. All right. You got that, Noah? All right. Can you tell me about the software? We already did that one. Okay, thank you. Thank you, Redneck. Captain Trader. Charles Swamp Thinker, Swim Trade. Thank you, Rich. What about Berkshire Hathaway? They don't pay dividends. Okay, if a company doesn't pay dividends, how do you know when it is going to go up? The reason I like dividend stocks is most companies pay dividends 4 times a year. Okay, jump on over here. Okay, see the dates? What do we have? Let's get rid of this. Okay, we got John Deere, Fifth Third Bank, Mondelez, U.S. Bank, Cardinal Health, Comcast, Cisco, American Express, Bristol Myers Squibb, J.P. Morgan, General Dynamics, Procter & Gamble, Verizon, AT&T, General Mills, MasterCard, Lennar, Bank Mellon, so on and so forth. All these companies are paying a dividend. All these companies will more than likely go up in value before they pay their dividend. Once they pay their dividend, they have a tendency to go back down again. So I don't like collecting dividends, but I do like using the dividend as the precursor or an indicator to tell me when to start looking at it. So if I like Procter & Gamble, I'm going to buy it 2 weeks before the dividend date. All I have to do is look at the calendar. What's coming up for a dividend this week? Oh, Procter & Gamble. Cool. 2 weeks, and then on a Monday. The reason why I do it on a Monday, because I like doing what's called a covered call. It's one of the safest trading strategies there is. So I want it to be simple, safe, predictable, consistent, % per week. That's what I'm looking for. Okay, it's not that difficult. Not too much to ask for. La 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 la. More questions, more questions. That's smart and funny. Hey, Tyler. Tyler Gagnon, how are you doing today? Noah, uh-oh. Does GGESX look good? I've never heard of it. Okay, now, not saying it's a bad company. I'm just saying I've never heard of it. GGESX. Hell no. What the hell are you thinking with this thing, brother? Look at it. No options, no thank you. Look at this. What do you call those things? No, double no, and no. Sorry, Jake, no. Prop firms, all right, Berligi Concepts, prop firms. I've heard of them. I've seen them. I just don't know the details. It's a part of the NASDAQ. Okay, but still, there's nothing there. Okay, there's no highs, there's no lows. They just open and then they close. Where's the high? Where's the low? Where's the bid? Where's the ask? Where's the options? If it has no options, no thank you. No dividends, no thank you. No weekly options, no thank you. That's a no. Okay, I have a very simple trading strategy. It was so simple I created it for my 9-year-old daughter. Okay, when she was 9 years old, she crawled up on my lap and said, Daddy, can you teach me what you're doing? I said, well, let me see if I can come up with something. So it had to be simple, safe, predictable, consistent, and no way for her to lose. All right? So let's keep on going. Andrea! Hi, James. How was trick-or-treating? Ooh, you know what? I got pictures. I just got to find them. Let me see real quick. I don't have them. They're not on here. Damn. I don't have any pictures. All right, I'll have to figure out why I don't have my pictures. Ken Carson, what's up? Big bro, big fan. Okay, all right, so let's keep on going. It was fun. I had a really cool, a really cool costume. I had pictures taken. I had them sent to my email address so I could just pull them up onto the screen. You guys can check them out. But no, don't find in my pictures. Okay, MRO. Marathon. MRO. Oh, no. What is that? Why are you guys all having me look at stocks that jumped up big? Look at the big jump. Gap up, and it kept going up. More than likely, this thing's going to drop tomorrow. Trump and Kamala is better for the economic side. Oh, boy. No, I don't do politics. Okay? I can almost guarantee half the people here are not going to like what I have to say. What did you go for Halloween? Paul, I'm going to have to show you pictures tomorrow. Because I don't have pictures in my camera. And I don't have pictures in my phone. And I don't have pictures in my email. I'm saying it loud enough so the person will be able to hear. They're not there. You sent them to the right address, right? Trump 2024 was my costume. Cool beans. All right, so let's keep on going. Take a look at Marathon. Give me a quick rundown of what you do. Ken, what do I do? Oh, okay, ready? Here we go. Take a deep breath. This is good. Right, ready, Ken? I invest in dividend stocks for a simple, safe, predictable, consistent 1% per week. That's over 50% per year, using only companies that have consistently increased their dividends for more than 20 consecutive years. Dividends like Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. I buy them just before the EX dividend date because just before the dividend date, stocks have a tendency to go up. By knowing when they go up, you have the advantage of buying a stock before the dividend is paid, the stock will increase, you get to get in, get the run up, and you get to collect a nice little premium in the meantime, collecting a safe, predictable, consistent 1% per week. How's that? Anyway, So let's keep continuing. MRO, let's take a look at Marathon. Oh, so Marathon's going to be a no again because it also jumped up today. Look at the big gap, and then it just kept on going. Beauty, love it. Ken, glad you're here, brother. You got any questions? You got concerns? Now, basically, what we're looking here for, Ken, we're not looking for capital appreciation. We're not looking for not looking to buy a stock and wait for it to go up in value. I'm 60 years old. I am retired. I have no desire, nor do I have whatever funds you think I have, because I don't. Okay, I have enough at 1% per week to live comfortably. I live comfortably. Okay. I don't live in a mansion on the water. I don't have a big supersized yacht. I don't have, I don't do jewelry. I don't do watches. I don't do those fancy cars. I'm a very simple man, okay? My vehicle cost me $500 about 8 or 9 years ago. And if it ain't broke, don't fix it. No desire to get a new car. If it broke, I will fix the damn thing. Because that's just the way I am, okay? I was born to a single mother, okay? My dad left in the 60s, so it was just mom and 6 kids. How the hell she paid and took care of 6 kids from what the government gave us? Because we were on welfare since the 60s. I'm happy to say that none of us adults take any money from the government, okay? All my brothers and sisters, wait a minute, my older brother, he lost his hearing, so he does have disability. But it's a valid disability. Okay, you can't call him and you can't talk to him. You can only send him texts because he can't hear. Anyway, so yeah, I live comfortably, and I forget where I was going with that conversation. All right, damn it, I forget where I was going with that conversation. Let's check and see if my email got updated. Nope, still no email. See if it showed up in my spam folder. Nope. Oh, there we go. Nope. Those are naked pictures. You don't want to see those. I have no idea what that. I got so much damn spam. It's unbelievable. Well, some of you guys probably will believe it. All right. So that being said, Andrea wants to take a look at Marathon. Okay, Marathon. Come on, Andrea. You've been here long enough. Ken. Oh, Ken. I do day trading with the group during the week. I've been in for just over a year and a half, and I've learned so much about stock market, but I'm always trying to learn more. Ken, absolutely nothing wrong with that, but I'm going to let you know here ahead of time. You're wasting your time here, okay? I don't do day trading, okay? I do safe, predictable, consistent trading looking to gain a 1% per week. You're day trading. You're probably looking to get 1-2% per hour, Totally different. This is totally different. I'm retired. I'm looking to get an income, and I don't want to sit in front of my computer all day. I've tried that. I've done it. Yeah, it's great. But then I'm trading my whole day away from money. You're going to get to a point. You'll get to a point at some point in your life, at some time in your life, where money no longer has the same meaning. Me, at this point in my life, my time is more valuable. Okay, I could, if I wanted to, sit in front of the computer and make a lot of money. That's not my desire. That's not my, it doesn't drive me. Okay, you can only buy so many cars. You can only have so many yachts. You can only have so many houses. And you can only drive one car at a time. You can only be in a 3-foot square at a moment. Okay, so what if you have a big, huge mansion? You're still in a 3-foot square. Okay, no matter where you are, there you are. No matter where you are, there you are. Anyway. Yeah, money's not a driving factor for me anymore. Time to contemplate life. Sit and watch the birds go in and out of the birdhouse. I spent, I think, 5 hours one day watching a chipmunk climb up a tree, grab a nut, climb down the tree. Climb up a tree, grab a nut, climb down the tree. 5 hours. I watched that little sucker go up, down, up, down. That's all he did all day long. I just sat there and watched him for about 5 hours. It was awesome. It was a very quiet, very peaceful day. It was one of the best times of my life. All right. Intel, nice jump on earnings, but coming back down. Paul, we're going to take a look at Intel next. All right, so let's keep a couple more of these questions. Ken, I'm kind of doing the same thing when I'm waiting for my trades to develop. Yeah, you're sitting in front of a computer. Yeah, I tried that years ago. Okay, now when you retire, when you have enough money that simple, easy trades once a week, I slipped on some baked beans today. Grady, that's absolutely delightful. I actually had baked beans for breakfast this morning. Weird. You know, there was a bunch of it in the refrigerator. I just grabbed the spoon and cold. Love it. I love that bachelor mentality. Like, we eat stuff right out of the can. No, it wasn't. No, it wasn't in the can. It was in a leftovers container in the refrigerator. Didn't even heat it up. All right, let's keep on looking what we're looking at. Jason, I have $1,000. How can I get started? Jason, my best advice to you is education. Keep coming back every night. Find out what it is you want. Okay, $1,000 is not going to go very far. Okay, I have no idea how old you are. I have no idea what your risk factors are. I have no idea what your goals are. Okay, what kind of time frame you have, what kind of education you have, where are you starting from? These are all valid, good questions. But the very first thing you need to do, for everybody, is education. Educate yourself. What does this mean? What does that mean? What happens if I do this? What happens if I do that? Okay, where do you want to be in 3 to 5 years? Where do you want to be in 10 to 20 years? Okay, where's the best place for you to invest that $1,000? Maybe it might be in education. Maybe it might be, I don't know, a bicycle so you can drive back and forth to the library to use their computer for free rather than buying a computer. Okay, I used the library's internet for a long time. Okay, Apple, buy or sell? Ooh, we're going to hold on to Apple as soon as we finish up with, what did he just ask me a little while ago? Somebody asked me about something. All right. Somebody asked me about something. I forgot what it was. Oh, Intel. There we go. We're going to take a quick look at Intel next. Okay. MROs, no. INTC. Now, just to let you know, I do have some Intel. Okay, so let's take a look at the numbers. First thing, as always, the high, the low, where was it? Where is it? What direction is it going? Up, down, channeling sideways. It's currently at 23.01. The 23 is going for 95. Holy shit. That's 4%. Now, I already own Intel. I already have it written down. Yeah, I have it written down and circled for consideration for next week, because this is a nice setup. Let's take a closer look. Now, a year ago, Intel was at 35.97. The high of the year was 51.35, and that was the end of the year in late December. Okay, she stair-stepped down, 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 down. Now she's back here. Let's look at the last 30 days. Now, the reason why I like the last 30 days, because it gives me a good idea of where it's going next. Because, look, 30 days ago was a 30-day high. Today is the 30-day bottom. So we're basically going to wait and see what it does. But, take a look. Down, up, down, up, down, up, down. Well, we're going to find a new bottom, and then she's going to go to the upside. When? Don't know. Could be tomorrow, could be Monday, could be Tuesday. But this is a perfect opportunity to keep our eye on Intel. Now, I grew up in the 60s, 70s, and 80s. I saw Intel introduced to the market. What was that, back in the late 70s, early 80s? No, it was in the 80s, Intel. Okay? So, 23, 4%. That is on my list to take a look at next week. Now, I follow certain stocks consistently. Do you play support and resistance level swing trading? Yes, I do. But I do it simply. I don't. You guys on day trading, yeah. I look at end of day data. I don't look at it during the day. Seriously, I don't. I look in the morning I have a morning trading group, just like you belong to a morning trading group. And then we look in the morning, and then at night we look again. Okay, so I was at my son's Halloween party tonight. We left there at 8:15, and we got here like 5 minutes of 9. I'm running around getting the shower, throwing the computers on, all that kind of nice, neat, fun stuff. I don't even get to relax yet before I jumped on here with you guys. So, Intel, we're going to keep our eye on it next week because we'll be looking for the bottom. Now, for those of you guys who keep showing up, great, glad you're here. So when Intel makes that turn and starts going to the upside, wonderful. Intel has awesome premiums all the way down, 5, 6 strike prices down. Now, some companies, as the lower you get out of the money, the premiums just seem to disappear. I don't like that. Intel, great. Dell, great. There's a couple of companies that have really great premiums. Okay. These are videos you see when it's close to the top. Okay. Adamondo. Adam Odo. I have no idea how to pronounce that one. Okay, let's take a look at Apple. Now, I do have some Apple, just so that you know. Apple has 2 down days in a row. Cool. What does that mean? Doesn't really mean anything. Okay, so let's take a look. High and low. Where was it? Where is it? Look at this. Up, down, up, down, up. Now she's coming back down again. 221.83. All right. The 221s, so the 222s are going for 7? Holy shnikey. That's over 3%. Here's the big question. If you like Apple. Well, why wouldn't you like Apple? Let's take a look at the seasonality for Apple. What's going on with Facebook? Having issues with Facebook. I've been having issues for quite a while with Facebook. What's going on there? All right, so what are we looking at? I forget what we're looking at. All right, so Apple, a year ago, 168.90. Okay, we bottomed out in the middle of April, and that was 163.58. Shoots up. Here's the high of the year, 237, and that was the middle of July. Okay, she drops down, shoots back up. Let's see this right here, because this is the last couple of weeks. That's the most important part. Why? Because it gives us an idea of where it's going next. Well, if we know where it's going next, it can make or break a good trade or not, because we know where it's going. Okay, so last 30 days. Here we go. 30 days ago, we're right here at 3. Oh, wow, I gotta move that over. Move it on over. I want you slide it on over. Move over, cool dog. A hot dog's moving in. Okay, so 30 days ago, 332. Drops all the way down to 222. Shoots up to 238. Now we're back down to 225. Look at that. Down, up, down, up, down. So it looks like it should continue to come down, challenge that 30-day bottom, turn around, then go back up. I love Apple. Here's the reason why. Not just this chart here, okay? Not just the premiums, what you collect, the numbers, but look at the seasonality for Apple. Now, seasonality, like I told you, it's all the way to the left, January 1st. All the way to the right, December 31st. Look at the red line. The red line is 10 years worth of data. That's 2014, 15, 16, 17, 18, 19, 20, so on and so forth. 10 years of data. Look how nice, straight, beautiful escalation. Not huge going up, but consistently going to the upside. No big dips, no big jumps, smooth, elegant transition from January all the way into December. Here we are right here. What can we expect? Well, we can expect it to keep going up, because that's what the average trade is. Keep going up. Alrighty, so that's Apple. Now, like I said, I do have Apple in, I think, 2 accounts. Anyway, there are videos you see when it's close to the top. I'm not quite sure what you mean by that. Standard. Here we are, back where we are. Never sell at a loss. Andrea, yep. She gets taxed on dividends and less air trading, and then out of your Roth IRA. Okay. Are you Canadian? I don't know where you'd get that idea. No. I'm bloody Bostonian, sir. Bostonian. Yeah, I was born in Boston. Okay, hold on. What are we looking for? Looking. I missed all these questions. Holy shit. All right, here we are. Caught up. All right. No, I'm not Canadian. Okay. The Andy Griffin. Yeah, I remember that one. Do you use AI to make bot clone accounts of yourself? No, I do not. Apple buy or sell? We already took a look at that one. Nike's EL worst day in history dropped down 20%. Hey, William, don't make me feel worse than I already do. I have some Estee Lauder, and I got a margin call on my Estee Lauder. It dropped so much, they want me to throw some more money at it. It's like, oh, fuck. I hate when that happens, but it does happen. So be prepared, because if your stock drops enough and you have a margin account, yeah, you're going to have a margin call. Yes, Miss Jill, I'm late because I went trick-or-treating. So I'm trying to see, did my pictures show up yet? There they are. All right, let's make that bigger. Itsy bitsy teeny weeny yellow polka dot bikini. Look at the size of those freaking boobs. I went as a big boob. And a little bit of nipple showing. There's my grandson. Isn't he adorable? He went as a little ninja. Oops. Yep. Anyway, all right, we don't need to see that anymore. That's funny though. I went as a big boob. All right, let's keep on going. So, Apple. Yep, that's why I was late. I went trick-or-treating. Nothing compares to Thinkorswim. You're absolutely right. Now 15 years ago, I wrote a book on choosing the right trading platform. That was 15 years ago. I found this 20 years ago. And I thought to myself, because I think I was paying like $30 or $40 a trade. When I first started trading, I started trading E-Trade, I think it was. It was $125 a trade. $125 to buy, $125 to sell. So you better damn make sure you knew what you were doing, because the commissions I was paying was freaking ridiculous. All right. American Airlines doesn't pay any dividends. Andrea, you're absolutely right. Not that I would trade it, just somebody asked me to take a look at it. Top 5 stocks. It really depends on what it is you're looking to do. Okay, we already checked Apple, RNG. Alex, what the heck is RNG? RNG. And that's never a good sign when I say, what the heck is that? All right, so it has weekly options. Okay. Unfortunately, what were you thinking here? Think about it. I'm looking at it. Are you showing me that it went up? I can see it went up. Why are we looking at it? Can you explain trading options? Arnold, let's see if I can explain this simply, all right? Let's say, hypothetically, you have a car sitting in your yard. An old Volkswagen Bug. Cool beans. All right, so you push it out to the front lawn because it doesn't run, slap a for sale sign on it, and you say $1,500 or best offer. So Pete from down the street, the guy in the yellow house with the blue shutters, yeah, that guy. He shows up, say, hey, I like your car. Let me give you $100. Hold it for me until Friday. If I show up on Friday, I will pay you $1,500. The $100 is yours either way. If I don't show up on Friday, you keep the car, you keep the money, sell it to somebody else next week. Same thing, okay? You're buying a stock, you're selling the right for someone to buy it from you at a certain price at a certain day. Do you think MSTR will be able to rebound the latest news? Ken, sorry, I don't trade that one. Okay? No dividends, no thank you. No weekly options, no thank you. Okay? So back to the option. Very good explanation. You like that? Okay. So, but the option allows you to sell the rights to someone to buy from you at a certain price, $1,500, by a certain date, this Friday. If he doesn't take it by this Friday, he loses his $100. You get to sell it to somebody else next week. Okay? That's a call option. A put option, I'm not going to explain that now, because if you're asking what that one is, you're going to get totally confused by a put option. Yeah. No. All right. So anyway, let's keep on going. RNG, Ring Center. What the heck is that? RNG. Just in case you were wondering, this is Yahoo Finance. I'm putting in here Yahoo Finance. It gives me all the details, the highs, the lows, the open, the close, the options, all that kind of nice, neat, fun stuff on any and every company. That way it allows me to see the details. RNG, there are no dividends in this selected time frame. No dividends, no thank you, Alex. Sorry. Talk about selling calls for 1% of the bid. A billion? Ken, do you play forward options? If you do, what is your strategy? Okay, Ken, I'll touch on that in a second. Let me ask this question right here from a billion. Okay, talk about selling options for 1% of the bid. I have no idea what that means. Okay? But I will tell you how to get 1%. So let's look at a good one. About Harley Davidson, H-O-G. No. Harley Davidson. Okay, Arnold. Would you recommend putting a large portion of your savings into... Okay, would you recommend putting a large portion of my savings in an interest ETF that offering a better yield than my bank? Arnold, what I'm going to tell you at the moment, okay, take this for whatever you want, okay, however you landed up here, welcome, okay, I look at things totally different than anybody else. I don't like banks, okay, I went into a bank to get a loan the other day and they said I have to pay money to the IRS in order to borrow money from them. I said, what the hell do you mean by that? Well, they want to see 2 years of taxes. I said, I don't pay taxes. Well, then you can't borrow money. So what the hell is that supposed to mean? Well, we got to prove that you make money. Well, can't I give you my bank statements? She says, yeah, but that doesn't tell us anything. I said, well, it tells you how much money I make, doesn't it? No, it don't. Anyway, so yeah, I don't like banks. I don't trust banks. But anyway, I don't look at things the same way. Most people invest to hold on for a long period of time, and they look at annual yields. It's probably what you're looking at. What's your annual yield from your bank? What, 4% maybe? Maybe, if you're lucky. Okay, a couple of years ago, it was 1%. Can you imagine that, putting your money into a bank and 1% return? So I look at things a little bit differently. Okay, you landed here, great. Now you need to ask tough questions. And don't believe what they tell you. Because what they tell you is what they're trying to sell you. Okay, when you go to TikTok, YouTube, and all these other social media sites that they're trying to ban, that you can look for information that is so far out there, you'll think to yourself, how can that be true? How can somebody make 50% per year consistently for more than 15 consecutive years? How can they do that? Well, I do. I make a safe, predictable, consistent 1% per week. Now, I'm not telling you to do it. I'm telling you that you now know that they're possible. Don't listen to a word I say. It's just a possibility. It could be true. It might not be true. I don't know. You have to figure it out for yourself. But don't listen to what they say. If they say something that you hear is contradictory, okay, that's like John P. What's her name? That state that girl who speaks up on the podium at the White House. The border's secure. There's nobody coming in. Fucking bullshit. Don't listen to people that are telling you something contradictory to what you're actually seeing with your own eyes. I show people the exact trades that I make every single week. Okay, where are they? Hold on, right there. Oh, let it load, let it load, let it load. There it is, right there. Okay. So these are trades I make, okay? Walgreens, Marathon, Kohl's, Ford. All right? That week I made 5%. I 0.72, not quite 1%, but look at this one, 4.5%. 5. And what did I trade that week? Okay, Walgreens, Kohl's, Marathon, Ford. Was that the same one as this one over here? No, no, 2 different accounts. But anyway, 2.8 for 1 week. 1.45 for 1 week. 3.36 for 1 week. The answers are out there. You're just asking the wrong questions. You're going to the wrong people. Go on TikTok, go on YouTube, go on Instagram, and ask those outlandish questions. Where's the best place to put my money? Day trading? No, I don't do day trading. Buy on a Monday, I sell an option on a Monday, and I just watch it during the week. I don't trade during the week. And on Friday, options expire. Great, I buy it. I buy a stock on Monday, I sell an option, the option expires on Friday. So Monday, I do the same thing over again, and I do it over and over and over again. 1% per week comes over 52% per year. There is a possibility of doing that. There are a lot of trading strategies. A higher risk, higher reward. Lower risk, lower reward. If you want absolutely no risk whatsoever, you're on the wrong freaking planet. You stay in bed, there's a risk. You walk out your door, there's a risk. You jump in your car, there's a risk. Okay, you don't go to work, there's risk everywhere. It all depends on how you look at it. If you want a good, decent return, look alternative. Okay, I am so far out there. Nobody believes that you can get 50% per year. They think it's freaking crazy. Anyway, but educate yourself. Okay, you're actually entering into a rabbit hole. Okay, because everything you were told, you now is the tip of the iceberg. Wait a second. If this is true, then I would have been lied to all these years. If this person's lying to me, well, maybe this person's lying to me. And maybe this person's lying to me. That's like when Joe Biden said, I did nothing wrong. He's on TV, on camera, saying, if you don't fire the prosecutor, you ain't getting the money. How the hell could you not, how can you misinterpret that? Okay? They get pictures of his son doing shit he shouldn't be doing. My son's done absolutely nothing wrong. If people have been lying to you, and you can see it right smack dab in your face, what are the other things they've been lying to you about? Okay? If you can double your money every 14 to 16 months, how long is it going to take you to reach your goal where you don't have to work again? Think about it. Now, if I'm giving you this information for free, 50% per year, simply, safely, predictably, and consistently, what do you think I got up my sleeve that's getting more than that? I only teach one trading strategy here. I have a whole shitload of trading strategies that I use consistently. I only share one here because I want you to walk through the door. I want to give you something. And this, pretty damn good if I say so myself. So anyway, Ring is going to be a no. They haven't been around long enough. They don't have any dividends. No, thank you. Do you enter the tickets yourself? Surfer, I actually do all the trades myself. Okay? I buy, I sell, it goes to the market maker. The market maker is the one who actually has access to that information. Okay, so no matter where you go, if you E-Trade, Charles Schwab, Fidelity, International Broker, Robinhood, Acorn, Webull, any trading platform you use, you are going to have a market maker. He's the only person you can buy from, and he's the only person you can sell to. Okay? All right. Have you answered the door to trick or treat in theaters with that t-shirt? No, I don't even wear this t-shirt outside. Okay, so a billion, you want to talk about 1%. Okay, cool. So let's put in Ford. Why the hell not? I like Ford. Okay, so currently, here's this chart for Ford. The high, the low, where was it, where is it, what's the direction? up, down, up, down, up, down. Right now we're at 10.29. The 10.30 is what I can buy it for tomorrow morning. Uh-oh, I missed the question. Arnold, I am from Canada. I wish I could buy without getting taxed like crazy on the dividend. You can, but it's going to be a little tricky. You can use what's called a VPN, okay, virtual private network, which means your country don't know shit what you're doing. So you could, hypothetically, sign in from anywhere in the world and end up in Boston, or end up in Chicago, or end up in Miami. Okay, I can sign in from St. Petersburg into Russia. I can sign in into Johannesburg. I can sign into Beijing. Well, I probably couldn't, but anyway, you get the point. Okay, a VPN allows you to sign in and mask where you are or where you're going. Okay, hypothetically speaking, it shouldn't be anyone's damn business what you do, as long as you don't do anything illegal or bad. They might think it's bad because they're not getting, they're not putting your hands in their pockets. Their hands in your pockets. Anyway. All right, Billion, let's get back to you. If I'm buying the stock at this price right here, $10.30, I'm going to sell it to someone for 1 or 2, okay? Either the 10 or the 10.50. Because I can choose either one. I can even sell it at 9.50. I can sell it at 9. I can sell it for 8.50. I can sell it at 12. As a matter of fact, I could sell it. You're going to like this one. You ready? I could sell it for $5.50. I can sell it for 19. Well, I can't because it's at 0. But anyway, if I buy it and I own it, I can sell it for whatever I want to sell it for. Now, it all depends on what your strategy is, why you're doing it, because you should never buy something unless you have a good idea of what you're going to do with it. That means, are you going to sell it? Are you going to keep it? Are you just going to collect the dividends, or are you going to collect the premiums? I like to collect the premiums before the dividends. All right, anyway, so at 10.30, if I sell the 10s, I'm getting 35 cents. Well, I'm losing 30 cents right off the top, which means I'm only making 5 cents. That's a 0.5%. No, thank you. If I do the 10.50s, I'm making 11 cents per share. But wait, if it goes at 10.50, I'm also collecting the difference between 10.30, what I paid for it, and the 10.50, what I sold it for. So that's 20 cents here, which is 2% of the purchase price, okay? And it's 1% here. That's a possibility of 3% per week. But the stock has to go up to 10.50. But here's the thing, okay? I can sell next week's and get 1% here. Okay? Let's say the stock doesn't go over 10, okay, or 10.50. Let's say it takes a couple of weeks. Well, I can do it this week coming up, collect 1% here, okay? If it doesn't hit 10.50 by Friday, well, I can write next week's 10.50 and pick up another 1%. If it doesn't work there, I could sell next week's. And I can do it every single week. As long as I buy the stock and own the stock, I can do whatever I want. Okay? I could buy it tomorrow morning, and I can sell not next week's, not next week's. I could sell September of next year, okay? And pick up $1.29 per share. Now that's 12% return. Of course, it's like 6 or 8 months. I wouldn't do that myself, but you could if you wanted to. Okay, so that being said, hope that answered that question, Billion. A billion. So you buy stock and sell calls all on Monday. Yep. Close, just add the eel. I have no idea what that means. Richard, do you only trade options? Or do you trade regular stock purchases as well? Okay, Richard, I buy a dividend stock first, and then I sell a stock option against it. That is called a covered call. The semi opens doors like a truck driver. No idea what that means. Andrea, the reason why I asked to look at MRO is because I bought it, before the big jump up. Well, cool. Well, well, in that case, Andrea, all right, is being acquired by ConocoPhillips. Hence why it went up. Cool beans. I didn't know that. Marathon is being bought by Conoco. And just in case you didn't know, Andrea, Conoco is C-O-N-C-O. It kind of throws me off when it's the case. MN, how are you today? Satisfying slime time. Oh, yeah, I saw that. Okay, slime time. Good grief, Estee Lauder got pounded. It hasn't been this low since 2014. Yeah, tell me about it. I got a margin call today. I got 2 margin calls today. One on one account, one on another account. Yeah, I hate when those happens. But they do happen if you have a margin account. All right. Well, Andrea, if you let me know what you got Marathon at, and did you even sell any options against it? Uh-oh. Uh-oh, I got a newbie here. And now I can tell I have a newbie here? Because they're asking me about SPY. SPY is not something I would do. Now, the reason why, let me show you why I don't like SPY. Okay, I'm not even going to show you the options. I'm not going to show you the charts. I'm going to show you data. I like data because you can't argue with data. Well, you could if you wanted to. Kind of pointless, though. SPY. You know, that's one of the reasons why I don't talk to Democrats, because you just can't talk to them. Question: how do you take losses but still smile and stay positive? Slime, I didn't take any losses. I had a margin call. That's not a loss. Okay, that means the stock went down, and I borrowed money against it. So now I'm just paying the money back. So when the stock retraces, well, that money shows back up in my account. Okay? If you have a margin account, you're borrowing and you're using someone else's money. They have a right to call and say, hey, your collateral is below 50% loan to value. You need to pony up some more. So I like Estee Lauder. I have no intention on selling at a loss. So if it drops in price, I have to match 50-50. Okay, so when the price goes down, okay, if I sold for a loss, yeah, I'd be unhappy. But I didn't sell for a loss. I have no intention of selling for a loss. Okay, so now remember, I make more than the average. Okay, I make over 1 to 2% every single week. That's over 50% per year. I'm borrowing the money at 8%. So if the position goes down below, because remember, half the money's mine, half the money is borrowed. If it drops below 50%, yeah, I got to pony up some money. All right, so somebody wanted to look at Spider, SPY. Now, I'm saying I don't like it, and now I'm going to tell you why I don't like it. Okay, so let's go all the way back to 1993. Now, who said something about SPY? Okay, there's not even a name there. I can't even pick on this person by name because there's no name attached to his account or her account. I'm fair either way. Okay. Now, understand this. When you are retired, you hear a lot about fixed income. Okay? I need an X amount of dollars coming in every single week so that I can live comfortably. You know, pay the bills, eat, you know, those kind of things. So, hypothetically speaking, if I have my money in Spider, listen to how horrible it is. Very first one, March 19, 1993, 21 cents. Let's just call it 21. So 21 to 32. Well, that's good. That's going up, right? Okay. Then it dropped to 29. Okay. It doesn't sound like a lot, but from 32 to 29 is just under 10%. Now, can you understand what 10% is? All right, let's explain it to you this way in bigger numbers. Let's say I get $1,000 in June 1993. Okay, the very next payment is 10% less. 10% less of $1,000 is $900. So I'm getting $1,000, Now I'm getting 900. How possibly do you think that's good? It's not. It's a 10% decrease. Okay. But wait. It gets worse. It does. Watch. 93 goes from 32 to 27. That's a 5-cent drop. Okay, drop by 5. Okay, well 5 on a 32 cent stock, a 32 cent dividend. Okay, that's 10, 15. It's about a 15% drop. 15% drop. So from 1,000, it's 850. That's a $150 drop. Okay, 15%. That's big. If you're used to getting 1,000 and all of a sudden you're getting 850, I'd be a little upset. But wait, it does get worse. 27 to 31 to 29 dropped again. 36 to 27. That's 9. That's 25% drop. Okay, do you understand what 25% drop is? From $1,000, 25% drop is $750. So now I'm only getting $750 a month. Hell no. All right, but it gets worse. It does. 27 to 32 to 31 down. 38 to 29 down 9, which is 30%. 35, 37, 37 on top of that. That is about 20% drop. 35, 38, 31, 7, that's about 21% drop. 35, 36, 39, 32, that's 7, that's 20-something% drop. But it keeps doing that. You keep going week or a month after, or is it quarter? Yeah, it's quarter. Quarter after quarter after quarter. Okay? 10% drop, 20% drop, 30% drop. But wait, you're not going to believe this. It does get worse. Seriously. Okay? So up, down, up, down, up, down. No consistency whatsoever. It goes up, it drops 20%. It goes up, it drops 30%. It goes up, it drops 50%. Yeah, no thank you. But it gets worse. How do I mean that? Well, let's go over here to the summary. The summary will tell you the numbers. Okay? Are you ready for this? Because this is not good at all. If you invest $580 per share in the spiders, $580 per share in the spiders, what is your rate of return for the year? Are you ready? 1.22%. Explain to me, please, in a manner in which I'll understand why the hell anybody would think 1.22% is okay. You can give it to the federal government. The federal government is paying 5%. And that's guaranteed. Okay? The spiders is not guaranteed. You've seen the dividends. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. No consistency whatsoever. It's great if you're young and you don't mind getting 1.2% per year. Me, it wouldn't work for me. I'd still be working. No, thank you. I only like companies that actually have a consistency and increased dividends. Increase. That means that 1, 2, 3, 4, 7, 12, 18, 35, 38, 52, 73, higher and higher and higher. Not up, down, up, down. Yeah, no. Spider, no thank you. Besides last molar, how are you doing today? Do you only buy options? Richard, no, I don't buy options at all. Richard, please understand this. Stock options, 80%. Get it? 80% of all options expire worthless. Okay? Why would I want to buy them if 80% expire worthless? Okay? I don't want to be on the 20% side. I want to be on the 80% side. I want to sell options. That's all I do. I buy the stock, I sell the option against it. It is the safest trading strategy out there. All right, how long do you have to own the stock before it will pay a dividend? 2 days. Taylor, you got that? 2 days. Austin, what's happening? Do you take a nice vacation? I haven't taken a vacation yet, but here's the thing. Some of you who've been following for a while, you know that I'm trying to get my motorhome moved over to my mother's house. Okay, I had the diesel mechanic over there today, and we're planning on moving it on Saturday. Once the motorhome is moved on Saturday and set up, I'm taking a vacation. I'm going to Maine, and then I'll be broadcasting from Maine. It might look a little bit different because in Maine, the setup is a little bit different. All right, Palantir stock, no. Can you take a look at Dell? Sure, let's take a look at Dell. I like Dell. Dell is one of those few companies. Oh, wait a second, we ain't done with Ford yet. Okay, so we were looking at Ford, so let's take a gander at it. A year ago, Ford was at 981. Okay, the high of the year, look at that big jump in the middle of July, the 17th of July. Now from there, a couple of weeks later, yeah, here's the bottom, the beginning of August. Okay, right there, the 5th of August. Up, down, up, down, up, down. Okay, well, let's get a lot closer. Let's take a look at the last 30 days because that's the important thing, in my humble opinion, of course. Okay, here we go. 30 days. 30 days ago, we're at 1050. Up, down. Look at this nice run up. Now, you're going to hear me say this every single night. And a lot of you people that have been here for a while will say, yep, that makes sense. He always says it. If you don't take a profit, don't be surprised if the market maker takes it away from you. Look at that. Our 30-day high was $11.40. You don't take your profits. Look at the run up. Okay, the bottom is here at 10.50, and it runs up to 11.40. Granted, it's only 90 cents, but 90 cents on a $10 stock. Okay, that's what is that? 10%, almost 10%. A nice little increase right there. If you don't take your profit, the market maker is going to take it away from you. That's exactly what happened. Okay, so that's the 30-day bottom right there on Tuesday. Okay, and that was 10.18. Okay, yesterday was a little bit up, today's a little bit down. So it's not going to be a good choice to jump into until it turns around and goes back up. All right, so it's going to keep going down until it's done, because that's what they do. They go up until they're done. They go down until they're done. Okay, so cloudy day. We're going to take a look at Dell, because I like me some Dell. Okay, so here's Dell. First thing I always want to see is where's the high, where's the low, where was it a year ago, where is it now, and what's the direction? Up, down, up. Well, that's pretty easy, right? Okay, so we're here now, 120. Those numbers aren't right. 125.33. Okay, so right here, the 125s are going for 365. Nice, I like that one. The 126s are going for 325. Well, that's nice also. It's a little under 3%. Well, I like Dell. So I'm going to write Dell down. I'm going to write Dell down. Dell down. Okay, so there's Dell. A year ago, Dell was at the bottom of the year, 65.21. Okay, the high of the year was back in the end of May. She drops sideways, drops the bottom of the, well, wait a second, no. The 90-day bottom right there, 87.36. That was back in August. Up, down, up, down, up, down, up, down. So it's starting to come down now. Look at that, had a nice little jump up yesterday. Well, today she's coming down. You always got to be leery, in my humble opinion. This is just my humble opinion. You should always check your facts yourself. Never blindly listen to anybody online, especially me. I'm uneducated. I went to school of hard knocks. That means I did something, I messed up, lost a lot of money, and I learned that way. I didn't go to college for someone to say, well, if you do this, this, and this, you're going to lose. No, I didn't have that. I actually did this, this, and this, and lost a shitload. Okay, I could have went to school and learned that. But no. Anyway, here I am, 20 some odd years later. This is what I learned. 123.63, Well, currently I can buy it at 125. The 125s, like I said, those are the numbers if you like it. Let's zoom in to the last 30 days to see what we think. Well, it's going to be a no for this week, but okay, down, up, down, up, down. So as soon as it comes down, turns around, goes back up, that's the time to take a look at it. I do have it written down. We will keep an eye on it for next week because next week it has great premiums. Okay, Jay Malo, I don't do Palantir. Palantir? No dividends, no thank you. No options, no thank you. Okay? No problem. You want to take a look at AVGO. AVGO is on my list. I like it. Ooh, look at that. That's interesting. Okay, first thing, always, 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 for me. Okay, you guys got to figure out what works best for you. Okay? Maybe getting dressed first in the morning works for you. Maybe hitting the shower works for you. Getting a cup of coffee before your shower works for you. For me, here's what it is. Okay, high, low, where was it? Where is it? What's the direction? Up, down, up, down, up, down. It is coming down at this moment in time. It's going to be a no. Look at the last 30 days right there. Okay, last 30 days. Up, down. We are now looking for a new bottom. Now, I like AVGO. Okay, look at the premiums. Nice premiums, even 4 or 5 strikes out of the money. I like that because no matter what happens to the stock, I always know I'm getting a halfway decent premium. 170.50. Well, the 170 is going for 5 1/4. I like that. So we'll keep our eye on AVGO. Next week, you guys are more than welcome to come back next week. I'm here every single night. Monday, well, no, 7 days a week. Estee Lauder. Somebody wants to take a look at Estee Lauder. Why? It crashed. What do you want to know? Okay, Estee Lauder hasn't been this low for decades. Okay, look, 30 days ago, we're somewhere in the 95 area. Okay, yesterday, 87. Let's go back a little bit. Okay, 30 days ago, we're at 105. Okay, slowly dropping. What is that, 80? 86.55. Okay, very next day, drops down below 65. I'm not quite sure what you want to see there. I smell a buy. They cut their dividends. Could be good for them, though shareholders won't get a dividend. Yeah, I get that. They didn't stop the dividends. They cut the dividends in half. Okay, this is one of those companies where the earnings report was positive. Okay, they got a positive earnings and the stock dropped. Well, why did it drop? Well, here's the reason why it dropped. Even though the earnings was higher than they thought it was going to be, their projection for the fourth quarter was less than they wanted it to be. So they cut the dividend in half. That's why she dropped, more than likely. Money 101. How are you doing over there in Instagram world? You guys, for some strange reason, you don't ask very many questions. Okay, Instagram, Facebook, and Twitter, they don't ask questions at all. Only YouTube and TikTok ask questions. All right, so anyway, hopefully that made sense. All right, trade level 100%, 10 empty, in and out. Okay. Top GT trades. Yeah, thanks. Okay, have fun. All right, sent email. Jules, night. Thank you there. Thank you there, Miss Jules. 25-year-old, have 25,000 in a Roth IRA. Is that good or bad or average? So what would you do with EL? Just hold it and wait for 10 years? No, hell no. Hold on that thought. Julie Ann Lender. All right, Julie Ann Lender, how are you doing? What am I going to do with my Estee Lauder? Well, I have it somewhere in the 90s. So come Monday, I'm more likely going to sell the 75s. All right? I'm more than likely going to 75s because the 75s are going for 45 cents. Well, 45 cents on a $90 stock is a 0.5%. 0.5% every single week is 26% per year. So why would I just hold it and not bring money in? Now, can it go from here past my 75? Well, yeah, it could. But is it going to? I don't know. We'll find out on Monday. All right? But I could sell the 72s. I could sell the 80s. I could sell the 85s. I could sell any one of these. Okay? I'm going to take a look, see what it does tomorrow. Okay? Because there should be a bounce to the upside tomorrow. Because we're talking Estee Lauder. You know, this is not Susie Seashells or Bradley's Boots. No. This is Estee Lauder. They're like a worldwide known brand. All right, let's keep on rolling. We're almost at 11 o'clock. All right, so Jordan, you got 25 grand in your IRA. You're $25,000. Great. I'm not quite sure what you're asking. Is that good, bad, or average? Well, that's relatively good from what I understand. Not financial question. Were you married? Yeah, I was married at one point in time. Not married now. Oh, Julie just got a question over here. Do you like or own Riot, Riley, MBL? They don't pay dividends. Yes, Julie, I'm aware they don't pay dividends. Okay? I'm also aware that they pay very nice premiums. And there are reasons why I own it. Okay? Because there are some influential traders that I follow. Okay? When I look at Warren Buffett, when he has, yeah, I usually don't ask very many questions. If it's good enough for Warren, it's good enough for me. And there are other traders that I like that I think as highly as I do Warren. Okay. Amy, I think James's approach is very efficient, following him to accomplish more while spending less time behind. Love to learn more about this method. Well, Amy, just hang out and chill. Hang out and chill and keep asking questions. Okay, so Burke be all the way. Warren Buffett sold UPS in 2023. Okay. D good, JEPQ, hell no. Looks like Target meets your criteria nicely. Yes, it does. Jay, just tried the method with CVS and lost about $1,000. It dropped based on unexpected news. Okay, Jay, I feel bad that you lost. Okay, so, but apparently you weren't listening to what I said. Rule number 1 is never buy something you don't know or don't understand. Well, we all know who CVS is. Looking back on it, would you still buy Estee Lauder? What flags were there? There weren't any flags. Everything looked good. That's why I bought Estee Lauder. Okay? You can have all the indicators and everything in your favor and everything looks rosy, and all of a sudden it drops. It's part of the game. Get used to it. Stocks go up, stocks go down. Never buy something you don't understand. Now, with Estee Lauder, yeah, it dropped. Cool. Now, the option that I sold is going to expire worthless. Great. Monday, I'm going to sell an option against it. But I'm not going to sell an option against it until I see what it does tomorrow. Because tomorrow, I'm assuming, and I know it's not nice to assume, but I'm guessing, is that better? I'm guessing that it will go up. When you have a big drop like that, and look at the amount of volume you had. As a matter of fact, let's take a look at it. We'll take a look at it in a better way. Okay? All right. You see these little blue dots down here at the bottom? That represents the average volume. Okay? So what is the average volume on Estee Lauder? Average volume on Estee Lauder is 2.9 million. Okay? Look at it. All those days, 2.9. Look at today. Stella. Hold tight, Stella. I'll get to that question in a second. Look at the volume today. 27 million. So now I'm going to do a little exercise with you, and you tell me whether or not the market maker over exaggerated, or was this a manipulation? Okay? Now you may think it is a good reason for it to drop as much as it dropped. But when a company like this drops this much, okay, and it creates that kind of volume, wait until you see what I'm about to show you, and then you will think differently about the market maker and the power and the influence that he has. Okay, so let's go back to the trade. Okay, Estee Lauder, 69 to 69.37. The spread, okay, what you can buy it for, what you can sell it for. So let me give you a metaphor, okay? The Circle K, Quick Stop, 7-Eleven, Quick Mart, Quickie Mart, whatever, the corner store right down the street. You all have a corner store down the street. Okay, the corner store is owned by one person, or it could be owned by a company. I don't know, one way or the other. But the store owner, let's call him the market maker. The store owner will buy a gallon of milk from Joe the farmer. He'll buy a gallon of milk for $3. He will sell it to you and me for $4. Okay, the amount of profit that store owner gets is called the spread between the what he bought it for, and what he sold it for. Now, same thing with the market maker. Okay, the bid is what I can sell it for, the ask is what I can pay for it. The difference between the two, with this many shares traded, is usually 1 cent or 2 cents. So let's go on the safe side and say it's only 1 cent. Okay, so he gets a penny for every share that is traded. Now we already took a look at what the average daily balance is. Okay, average is 2.66 million. Okay, so we get out of that 2.66 million multiplied by 1 penny, because that's what the spread was. So the market maker makes $26,000 a day on average. Okay, you see it right here, all these little blue dots? That's the average volume every single day, about $26,000 worth. Now today, the volume was 27 million. What was it exactly? 27,600,000. Okay, let's get out of that. Take 27,600,000. Whoops. 27,600,000. Multiply that by 0.01. Gives you a grand total of $276,000 the market maker made today. So on average, he makes $23,000 a day. On average, every day, 23,000 bucks. Today, he got some news. He manipulated the news to a point where he dropped the stock price, because he is the only one. The market maker is the only person who has control of where the stock opens. It's not a conglomeration of people who decide, well, what should we open it at? No, it's the market maker. So the market maker, he, she, whatever, it's only one person, okay, for this company. Now, it's usually at 87 bucks, drops it down to 65. Okay, by doing that, he initiated to a whole shitload of people, okay, and there was 276 million shares traded today. He walked away with $267,000. That's $250,000 more than he normally makes. And you're telling me that he didn't manipulate that number on purpose? I don't believe it. Convince me. Convince me with the power that the market maker has. He sees an opportunity. The company had positive earnings. Had positive earnings. Shouldn't the stock go up? So they're projecting the fourth quarter is going to be less. That's just a freaking guess. They're just guessing. Okay, so they cut the dividends in half. Now, of these 270 million, 270, the 270 million shares traded today, were those buyers or were those sellers? Were those people panicking and say, shit, I'm getting out before this thing drops more? Or were those buyers saying, Estee Lauder at 65, hell yeah, I'm going to buy some? Do we really care? It doesn't really make any concern. Estee Lauder. Okay, fine. Am I going to panic? Am I going to sell? No. I might buy some more so I can dollar cost average down. Because you're going to make your most money buying low, and you can't get any lower than that. Could that be buyers? Doesn't really matter. Do you think the market maker cares? No. He walked away with $276,000 today. He normally only makes $26,000, but not today. Today he makes $276,000. Why? Because he or she, let's be fair here, whoever it is has the power to manipulate the opening price of the day. And he did, or she did, whatever. It dropped. Okay? He or she purposely put it down here to get this volume. This volume is not normal. This is your normal volume right here. Okay? That's your normal volume. Now, did the owner of the company or did the board of directors call up all the employees? Hey, our stock just dropped. Don't come in for a week until we figure out this mess. No, that's not what they do at all. They continue to work. Well, it dropped. Big deal. Still do your 40 hours. Okay? Bill, the mailman, he's still going to do the mail in the mail room. Okay? Tina, the secretary answering the phone, she's still going to answer the phone. Okay? Betty, Tom, Joe, Cynthia on the assembly line, they're still going to put in their 40 hours. Nothing different in the company is going to happen. What happened is the perception of the value of the company drops. Doesn't mean nothing to the company. They're not going to call up and lay people off. That's not what happened. Okay? They got positive earnings. They made more money than they thought they were going to make. Okay. Well, now they're projecting the fourth quarter is not going to be as good as they would like it to be. Well, I could wake up in the morning and say, hey, I want to be, 6'4". It's not going to happen. Am I going to get, no, anyway, let's not go down there. Anyway, I think the market maker has more power than he should have. That being said, let's get out of that one. So, to answer your question, I'm not going to sell my Estee Lauder, okay? I'm probably, more than likely, going to sell the 75s because the 75s are paying 45 cents, okay, and I'm into it about 90, so 45 cents on a $90 stock is a 0.5%. 0.5% every single week, that's over 26% per year. No problem whatsoever. If the stock goes up, I'll move my option price up because as the owner, I can do that, okay? If it's currently at 68, almost 69, I'll sell the 75s. If it goes up, I'll roll it up to an 80. I'll roll it up to an 81. I'll roll it up to an 82. And I'll keep pushing it up until it finally gets back to where it's supposed to be. But I will collect some money every single week. Okay? I'm not in this game to just sit and watch stuff. A lot of people just buy a stock. Oh, it went down. I'm not going to do anything until it comes back. Why? 4 or 5 strikes out. I watch it twice a day, in the morning and the evening. I get a good idea where it's going to be. Did I know this was going to happen? No, it's called the black swan for a reason. It shows up, nobody knows. All right, let's go over this question over here. Stella, how can I learn your exact strategy? I'm not familiar with buying options, so I'd like to see the step-by-step. Well, Stella, you're in for a disappointment because I don't buy options. I'm a seller. I sell options. Because, look at it this way. If 80% of all options expire worthless, why would I want to buy them? Be on the 80% side of losing? No. I want to be on the 80% side of the winning side, okay? That is the people who sell. If I sell an option, the funny thing about the stock market is, if I buy something for $1 and sell it for 10, great. Well, what if I sell it for 10 and buy it for 1? Okay, I'm just doing it backwards. The stock market allows you to do the equation backwards. So if I sell an option for 10 bucks, 4 or 5 days later, I buy it back at $1 or even $5. Well, at $5, I just doubled my money. Okay? At $1, well, that's 9 times my money. Who do we have over here? Paige. What's happening, Paige? Okay? So, sorry to disappoint you. I don't buy options. I sell them. I buy the stock first. I sell the option. Get it? I'm looking for a simple, safe, predictable, consistent 1% per week. That's over 50% per year. Let's go for some more questions. Okay, say, Jay, CVS. Let's pull it up, take a look at it. Like I said, I feel sorry for you that you lost money. Apparently, like I said, you were not paying attention. Rule number 1, never buy something you don't understand. I understand CVS. I buy CVS every year. Okay? You lost money. You lost money because you weren't paying attention. Rule number 2, never sell at a loss. Question is, why do you sell for a loss? Okay, CVS is in over every major city in the United States. Why would you sell for a loss? Okay, here's the high, here's the low, here's where it was, here's where it is. It went up, it went down, it went up, it went down, went sideways, it went up, it went down. It's right here, right now. So why did you sell for a loss? I think it's a valid question. Okay? Uh-oh. Uh-oh, what's that one? Microsoft dropped, okay. I have Walgreens, blah, blah, blah. Wow, I missed a lot of these questions. Holy shit. La, 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 la. Okay, Jay, I just tried your method with CVS, and I lost about $1,000. It dropped based on unexpected news. Okay, so the only issue I have is, number 1, I have no idea who you are, okay? Number 2, I have no idea where you jumped in at CVS. Number 3, I have no idea what you did with CVS in order for you to lose $1,000, okay? Intel lost contract to a major chip company to AMD. AMD lost another major contract to NVIDIA. That is why NVIDIA is dominating, my humble opinion. Cool beans, Amy. I don't like NVIDIA. The reason why I don't know, a lot of people like NVIDIA because it keeps shooting up and going up. The reason I don't like NVIDIA, okay? Now, I watched and I witnessed the gold rush of the 1980s. That's where gold went $250 up to $850. And everybody's saying, yay, yay, awesome, 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 until it dropped. And when it dropped, those people who bought at the high at $850 an ounce had to wait 3 decades. That's 30 years. 30 years to break even. That's a no to me. Now, another reason why I don't like NVIDIA, the book value on NVIDIA is $2 a share. Okay, so if the Supreme Court says, nope, cease and desist, sell everything you have, pay off your investors. It's a possibility, okay? If that happens, you get $2 a share. So if a couple of months ago, it was at $1,200 a share, and the book value was still $2 a share. Can you imagine if the Supreme Court says you got to sell off and pay off all your investors? Well, great. At this current moment in time, NVDA is at 132, but it's only worth $2 a share. But wait, it gets worse. It does. What is the dividend on NVIDIA? 1 penny. 1 penny a share. It is strictly a, what do you call it? Oh my God, I'm at a loss for words. Speculation. Speculative trade. You want to buy it and you want to hope it goes up. Could it? Yes, it could. I don't like it because the dividend's crap. The premiums are okay. Okay? But the book value is horrible. Okay? Look at your fundamentals. Okay? Anyway, let's keep on going. Why did everything drop the past 2 days? Because I'm thinking most likely because of the, what do you call it, the election. Okay, we saw this 4 years ago. Same thing. Everything's going cuckoo and coming right up to the election. I wish you would turn this show into a wheel strategy. Just another step of safe income. Hey, James, I'm going to agree with you 100%. Love the wheel strategy. However, let's go back to here. Okay, let's go over to YouTube because I'm going to show you something and you're going to find it rather interesting. Look at videos. The oldest videos. Now.
Hi, I'm JC, and as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
I like playing this one. It makes me laugh every time I see it.
What does that mean? That means every single day.
Every time I see this, I laugh my ass off.
Different company paying out dividends. Seriously.
That's me 12 years ago, 13 years ago. Look at all the hair I had then. Look at the nice color. Oh, I got that salt and pepper thing going now. I hate it. People think it's distinguishing, and I hate it. Anyway, besides the point. That's who I created, not that bonehead, this bonehead right here. Okay. That's who I created this particular trading strategy for. You can go into my YouTube and you will see videos of me and her for the past 15 years. Now, the reason why I don't teach the wheel strategy, she was 9 years old when I taught her how to do this. Simple, safe, predictable, consistent, and no way to lose. That's the criteria I had to come up with to teach a 9-year-old how to trade in the stock market without losing. Because at 9 years old, if she lost money, she's going to cry, feel like crap, I'm going to feel worse, Mama's going to get involved, I'm going to be sleeping on the couch, maybe the doghouse, maybe pot potent in the backyard. Yeah, no thank you. Simple, safe, predictable, consistent, no way to lose. That's the strategy. I have not changed it since then. Now, this is the strategy I give to you all for free. You want me to start getting into puts? You want me to start getting into the deltas, the theta decay, the gammas? What do you call it? Hold on. It's coming to me. The Black-Scholes pricing methodology for stock options. Implied volatility. You want me to get into all that crap? Great. It's no longer simple. Okay? This is let's call it a stair-step strategy. It's your first step into the stock market. Great. A lot of people are starting out with just this. It's simple, it's safe, it's predictable, it's consistent, and there's no way to lose if you do it right. That's why I'm a little amazed that somebody lost money. Okay, if you do it right, if you listen to the 5 rules, number 1, never buy something you don't understand. Number 2, this is a big one, never sell at a loss. It defeats the purpose. Number 3, make sure the company's consistently profitable. 4, weekly options. CVS is all of that. Okay, number 5, make sure the numbers work. Okay? Andrea, sorry, James, sometimes I use Siri to speak into the text box and garbage comes out. Hey, did I say garage? Like a garage comes out. I know what you mean. I do the exact same thing. And then I look like an idiot because I have to go back and I have to change everything. And I'm sending, okay, anyway. Neo, what is a margin account? What does that mean? Okay, Neo, a margin account. All right. Now, when you're first starting out, I always tell people when you're starting out, always use a cash account because every dollar that you risk is yours. Okay? If the stock goes up $1, you make $1. Stock goes down $1, you lose $1. A margin account, you put up $1, the broker puts up $1. So now you have $2. So if the stock goes up, you make $2. But it also works on the flip side. If the stock goes down $1, you lose $2. Okay? So it magnifies your earnings. It also magnifies your losses. Now, I've been trading for over 20 years. I'm very familiar with the risks involved with margin. I'm perfectly okay with it. If the stock drops $1,200, well, today I had to pony up $1,200 because the stock dropped. Okay, the broker will never lose money. If you buy a stock for $100 and it drops 50%, well, you lose half your money. But if you're on margin, the stock drops 50%, you lose 100% of your money. So I always tell people, never use a margin account until you understand the risks that are involved. Now, margin account, I borrow that money and I have to pay to borrow that money. Now, I've been doing this for 20 years. I make a lot of money. Okay, 50% per year. I have no problem borrowing at 8%, 10%, 15%. No problem whatsoever. I even borrow against my credit cards to do trading. That's at 20%. Okay? That's freaking crazy. Don't ever do that. Now, I do it because I've been doing it for a long time and I understand the risks. Okay? But don't you do it. Okay? Until you understand it. Asim, what are your thoughts on applied materials? AMAT. AMAT. Interesting. Very first thing I always want to see. Got it somewhere here. Christian, how do you handle losing streak? And for psychology? Well, that's an interesting question. What's that? Okay. Losing streak. Well, I haven't lost anything this year. I have, I think, 4 positions I lost this year. That's it. Lost $26 on Ford, $150 on Walmart, I think 4,000 on AEO, and there was one more. It wasn't that much. Okay, I very rarely lose. Okay, I take my position if it goes down, like the Estee Lauder one. Hold one second, I got a question over here. Could you briefly explain how selling a put works? No, Julie, I don't do puts here. Okay, I only do puts in my morning trading group for those people who pay for my services. I'm not trying to sell anybody anything. Seriously, I'm not trying to sell you anything. But certain things I don't teach here because I give all this for free in hopes that, I'm helping people. Okay, that's number one. I'm looking for some people that want to come trade with me. Fine, that's open, that's an option. If you want to trade with me, great. It does cost $100 a month to trade with me. Okay, but it's, anybody who does it will tell you it's worth it. Okay, can you briefly explain selling a put? No. Is it just the opposite of selling a call? Absolutely not. Can it also be rolled forward? It can be rolled forward, but it's not the same as selling a call. A call is the right, not an obligation. A put is an obligation. It means you are required to do something. A call, you don't have to do it if you don't want to. Okay, and puts can be very confusing. Okay, so we're going to look at applied material. Right? Dennis Mancini, dude, we got 15 minutes left, but better late than never. I'm a paying member. I'll ask tomorrow. Yes, Julie, if you are paid, if you are a member of the trading group, I will let you know tomorrow. So remind me tomorrow. Now remember, tomorrow it's 2 o'clock, because it's Friday. Options expire on a Friday, so we jump on at 2 o'clock to make sure that everybody has a chance to make sure nobody's losing anything. Having issues with Facebook. Heck with Facebook. All right, where were we? Dennis Mancini, how are you doing? All right, so applied material. Okay, I like applied material. They've been in business for quite a while. They are a good company. That's awesome. Apex likes that. All right, so we're going to take a look at applied material. Okay, Grady cuts, CEG. What the heck is CEG? CEG. Okay. Consolidated, all right, Constellation Energy. Okay, hold on a second. CEG. Oh, they do have a dividend. Check that out. Now, ask yourself a question here for a second, Grady. Okay, you like CEG? Do you see what they're paying? This is worse than anything I've seen so far. 0.5 for the year. That's 0.5% for a whole year. This is the part where I get this part. What the hell are you thinking? Seriously, do you even read these numbers? Look, the dividend is $1.41 for the year. Okay? It's a $261 stock. Okay, the dividend is $1.41. The yield, how much your rate of return is 0.54. That's 0.5%. Seriously, dude? Okay, anyway, I'm not even gonna get worked up about it. It's your money, do what you want. Okay? So I'm looking for a simple, safe, predictable, consistent 1% per week. And you're looking to get 1.5% per year. Something's not right here. Think about it. Something's not right. All right, let's go back to Applied Materials, AMAT. Okay, so AMAT. High, low. Where was it? Where is it? Up, down, sideways. 182.80. The 182.50s are going for 480. That's awesome. It is. I'm going to write that one down. Wait a minute. Yeah. AMAT. Okay. A year ago was the bottom of the year, 128.92. It took it, but 8 months? 9 months. 9 months to find the top. We got a double top in the middle of July, 156. No, sorry, 256. Big drop, up, down, up, down, up, down. It's in a downturn at the moment, but wait, we're going to get there. The last 30 days. Okay, this is what it's looking like at this moment, this 30 days. 30 days ago, 205. Jumps up to 215. That's the high of the 30-day period. What happens on the high of a 30-day period? There's usually profit taking. Okay, I'm looking for 1%. There are other people out there looking for 3, 5, 7, 10, 12%. I'm looking for only 1. I get in, I get out. Thank you very much. See you next time. Okay? Big drop. Now it's here, 181.58. New 30-day bottom, right there, today. So what does that mean? The bottom is 179.28. Now, what does this stock normally do this time of year? Well, it looks like she should be going to the upside just a little bit. I mean, very little bit. Look at it, just very slightly to the upside. Okay, so very slightly to the upside. That's great. Now, what we have to do is just wait for it to find the bottom. Okay? New 30-day bottom today. That means tomorrow it could be lower, it could be higher. If it's higher, well, that's 1 day to the upside. I like 2 days to the upside. So tomorrow, Monday, may give us an opportunity to say, hey, Applied Materials is in play. Right now, if you know anything about baseball, it's on deck. Means it's getting up, it's ready. It's getting ready to be ready. Not quite there yet, because here's a 30-day bottom right there. So I have 2 days. I like 2 days to the upside. You have to decide what you like. All right, let's keep on rolling. Conservative. That's a no. What the hell are you thinking? Absolutely. Think about it. If you're going to invest your money, look at it this way. Okay, now, I realize I've been lied to all my life. I do. I realize it. Okay, I'm at the twilight of my life. I have to make changes now, and I'm trying to set a good example for my children and my grandchildren. You don't have to live the life that I lived. You don't have to go to work for 40 hours a week, 60 hours a week for your whole life. No, you should be able to just get a certain amount of money and then make a nice return off of it consistently every single week. Now, I've been saying for years that my children are totally in their own little world, but they are now getting to be in the matured age, which my son is now a father and he's getting married. Okay, so, and he owns a house. My younger son, he owns a house. He has a business. He has his girlfriend just move in with him and he thinks that she might be the one. Great, that's awesome. My daughter, she is with someone that she believes might be the one. her best friend is having a child. They are getting to mature age where they're thinking to themselves, am I going to work for the rest of my life like this, or is there a better way? Well, when they always ask, when their friends ask, what does your dad do? They always say, I have no idea what he does. But now they are seeing that they have a mortgage payment. They don't pay rent anymore. They have a mortgage payment. They have insurance payment. They have to fix the house. If something goes wrong with the house, they have to fix it. But the nice part about it is it's consistently staying the same year after year after year. Their rent does not go up. So they're getting to that point, and I'm hoping that eventually they will see there are. So as I was saying, I've realized I've been lied to all my life. So there are other alternatives. You don't have to do what the establishment wants you to do. They want to keep us working. They want to take taxes. Do you know why women are working? Why they're not at home taking care of the kids? Because the powers that be could only tax half the population. So how do they tax everyone? Well, they got to separate the male from the female. That's why they... all right, don't even get me started. So AMAT, pretty cool. We're going to look for the bottom. Okay, as soon as we find the bottom, like 2 days to the upside before we jump in, look at the numbers at 182. The 182 is selling for 480. That's well over 2%. 2% a week, that's over 100% a year. 100% a year. Now, I'm looking for just 1%. But if I can grab a 2, and it's Applied Materials, this company's been in business for over 100 years. They are dividend king. They have increased their dividends to the shareholders for more than 5 decades. To me, it's not it's a definite yes, because they're a dividend king. They have proven their worth. They have proven they know how to run a company because they consistently are profitable. All right, LNC, who the hell is LNC? It's never a good thing when I say who the hell is that, LNC. Yeah, hell no. Wasn't that quick? Ooh, Andrea wants to take a look at Walgreens. I'm surprised we haven't looked at it yet. Okay, Andrea, Walgreens, WB. I have no idea what Walgreens did today. Well, let's find out. Up. Yay, it went up. Okay, cool. All right, so Walgreens went up. A year ago, we're at 2090. The high of the year was right around 2679. Okay, look at the last 30 days right there. Here's your 30 days right here. Okay, 30 days ago, we're at 881. We dropped down to 850, shot up to 1111, I think it is. And then she drops down, goes sideways a little bit. Now, today, all right, it's a little bit awkward because today is a new bottom, but also it's an up day. So now we got to wait for 2 more days to the upside before jumping back in. 948, the 950s, they go for 29 cents this year. Holy shit. No, that's just below 3%. Did you hear that? Oh, that's only below 3%. Now, I don't spend that much time trading. 55, holy shit, we got 5 minutes left. I'm not going to bother rebooting. All right, so that's Walgreens. Let's go through the rest of the questions. LNC's no. Alibaba, maybe 2 weeks. Thanks, Jill. All right, I have Walgreens strike at 9.5 and close at 946. Roll or wait till expiration tomorrow. Andrea, at that close, right around, no, we're going to be on at 2 o'clock tomorrow, okay? So, just right around 2:30, 3 o'clock, somewhere in that area, that's the best time to ask that question. If it's at 9:46, then rolling it forward might be a great idea, or you could let it expire. What's the worst thing that could happen? It would depend on where did you buy it at. All right, let's keep on going. Amazon, hell no. Explain the pit option also. I have no idea what the pit option is. I know what a call option is. I know what a put option is, but I don't know what a pit option is. RGTI, sorry Jack, never heard of it. Microsoft drop worth holding out or suspect it will drop further? No idea. Okay, I don't like stocks over 250. Microsoft is in the 400 area. Okay, but let's take a quick gander. MSFT. Oh, hell yeah, that thing's gonna bounce tomorrow. We're talking about Microsoft. They've increased their dividends for 25 consecutive years. Okay, they're constantly profitable. Okay, so with a big drop like this, look at the volume. Again, the exact same scenario I explained to you a little while ago. Okay, whatever the news is that caused it to drop, okay, it could be just a manipulation by the market maker to make more money. Okay? But there will most likely be a retrace tomorrow. Mark sent me an ice cream cone. Cool, thanks, Mark. Emrod, how do I learn this? Well, Emrod, you're new here. Okay, now you may not know this because, like I said, you're new here. Okay, we are into October. November starts tomorrow. Okay, I've been here every single night. I only missed 5 nights since January. January 2nd. January 2nd was the first trading day of the year. So I've been here every single night except for 5 days. One day I was sick as a dog. Another day I had to take somebody to the emergency room. 3 days, hurricane. I'm in St. Petersburg, smack dab in the middle, right where the eye went over. Okay? No water, no electric, no cable, no television, no TV, no telephone. For 3 days. So I wasn't able to get on. I'm sure you guys lived just perfectly fine. So I've only missed 5 days. I've committed myself. Lucci, okay, you want to co-host? Great, awesome. DM me with your number. We'll give a call if you and I think alike and you can contribute to the conversation. Great. Other than that, no thank you. But I appreciate you offering. 86, happy Halloween. You missed the pictures, dude. Where is that picture? Uh-oh, I think I closed it out. I did, I closed it out. You missed the picture, dude. Yep, you missed my Halloween costume. Wetback, what's happening? Okay, great advice, Ocean, glad you like it. Neo, say that again, please. You buy an option on Monday and then what? Okay, Neo, I'm gonna say it slowly, you ready? I do not buy options. I only sell options. 80%, that means 8 out of 10, 80% of all options expire worthless. I want to be the seller. I do not want to be the buyer. Mom boss, what about Trump lying? Oh my God, don't even start. I can't talk to people like you. I come to the conclusion, anybody who's on the blue side, I can't talk to you about adult stuff. Sorry. It's just a waste of my time, and I do not like wasting my time. Neochromium, he buys shares and sells covered calls. Thanks, 86. Chromium, he buys stocks, sells the option against it. 6. All right, Grady Cuts, we look CEG, hell no. I mean earning tickers on calendars. Surfer, I mean earning tickers on calendar. Earning tickers on calendar. Oh, you mean this thingy right here. Okay. Yeah, those are all the earnings dates. Okay. Pepsi, Bank Mellon, JP Morgan, Wells Fargo, Fifth Third Bank, Procter & Gamble, American Express, KeyBank, US Bank, Abbott Labs, Kinder Morgan, PPG, so on and so forth. You mean those? Yeah, I have no idea what you want me to say about them. I don't like earnings. I don't pay attention to them. Because I've seen positive earnings where stocks go down. I see negative earnings where stocks go up. VLO, Jill, you want to take a look at Valero. VLO. Valero. Ooh, Jill, that's the first one I seen tonight that actually looks really great. So let's take a look at Valero. VLO. High, low, where was it, where is it, what's the direction, up, down, it's at 130.50, the 130s are going for $3, that's over 2%. The 131 is going for over 1%, the 132 over 1%, 133 over 1%, 134 over 1%, 135, just a smidge below 1%. I'm looking to get a safe, predictable, consistent 1% per week. VLO, check it out. If I buy it tomorrow morning at 30.50, I can sell next week's at 30, get over 2%. Any one of these here will give me over 1%. Okay, but the further out you go, less rate of return. The further in you go, the safer the trade. So you have to figure out, do you want safety or do you want a higher income? Okay, so let's take a look at the numbers. A year ago, 125.47. The bottom of the year was almost a year ago. It was the beginning of November, 120.17. Being a landlord is very good. I put work. Yep. I'm set for life. I wouldn't say so. Because the interesting thing about real estate is the money inside the real estate is not really that easy to get to. Okay, you can't spend equity. Okay, say if you buy a property for 200 and it jumps up to 400, that doesn't mean anything. That's just paper money. It's not real. You can't take that $200,000 in equity and go into Dunkin' Donuts or Starbucks and say, hey, I want a cup of coffee and a dozen donuts. You can't buy anything with equity. Okay, you need cash flow. Okay, and depending on what's going to happen, you have no idea if your property is going to continue to rent out. So there are good points to real estate and there are some bad points to real estate. Real estate's not very liquid. All right. Who's buying a call for less than the price? What's the logic? Okay, Mikey T, I'm not quite sure what you're talking about. Oh, wait a second. Let's finish up with VLO. All right, so last 30 days for VLO. All right, this is what I love to look at. Jill, this is an awesome pick. Look at this. 30 days ago, 136, jumps up to 146, drops all the way down to 127. Yesterday was an update. Today's an update. That's 2 days to the upside off of a 30-day bottom, coming off of a 30-day high. You get a 30-day high, you get your profit taking. Profit taking until it's done, turns around and goes back up. This is what I've been saying all day. Look for the bottom, 2 days to the upside. That's your indicator that's going to go back up. But before we do that, let's take a look at seasonality. What does this normally do? Normally, this stock has a tendency to go up for the end of the year. Okay, look where we are. Okay, a nice, very slight uptrend towards the end of the year. I'm going to write that one down. VLO. I like that one. That's a good pick, Jill. Thanks. All right. Mikey T, I have no idea what you're talking about. Because the premiums are what the premiums are. Who's buying a call for less than the price? That's the logic. I don't know. What broker do you use? I use Charles Schwab. Charles Schwab owns Thinkorswim. This behind me right here, this is Think or Swim. It was a very cool strategy, a very cool, what do you call it? Trading platform. They got bought and sold, bought and sold, bought and sold. Now Charles Schwab owns it. Have you ever been in debt because stocks can make you rich or get debt? Okay, DMZ, I'm not 100% sure what you mean by that question. Have I ever been in debt? Everybody's in debt. What companies do you trade? I trade a whole bunch, okay? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's Bliss. That's about 300 companies right there. Okay, 86. Calvin sent me a rose. Very nice of you, Calvin. Thinkorswim. Are you licensed? Yep, I got a driver's license. Do you have one? Andrea, worry about, wait, sorry about that. Siri, send something else. I regularly get box. Okay. Andrea MRO. What do you think about trading features? You mean futures? Yeah, no. Sorry, I did it years ago. I don't do it anymore. Do you like to own Riot? Julian, yes, I do. I like all of them. Yes, I know they don't pay dividends. I was in Portland, Maine last year. 100% loved it. That was spring, though. Okay. Rhythm Capital, RITM. All right, you're going to have to hit me tomorrow with that one. Yeah, Anthony, I saw Estee Lauder today. I'm not really worried about my Estee Lauder. So I have a call on Estee Lauder at 80. My first trade, so I was being down so far. Do I hold or roll? Roll or hold? Mikey, I'm not 100% sure what you mean. Did you buy the call or did you sell the call? Okay, and if you sold the call, did you have a stock to go against it, also known as a covered call? Or did, I have no idea what you mean by that. Okay, Anthony, we already did Estee Lauder. Okay, the screen behind me right here, everything I did tonight is recorded on YouTube. You can go to my YouTube channel and you can watch it over again. You can rewind, watch it over again, 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 rewind. Do you know what I mean? Okay, it's past 11:30. I'm about ready to, I just want to finish up these questions and be done with. SMCI, hell no. What do you think about SCI will affect AVGO? I didn't know they were connected. SMCI doesn't have dividends. AVGO does. I will trade AVGO. I will not trade SMCI. It just doesn't fit. Misty, MSTY, no. Okay, RITM, no. You know, there's dividend stocks. Yep, thank you. I am 48 now. How much can I invest in a Roth IRA, and approximately how much will I get when I retire? Rodrigo, I honestly can't answer that question. I can't answer it because I have known nothing at all about you. Okay? And I know nothing about the tax laws. Right? So I don't pay attention to any of that stuff because all that stuff doesn't mean anything to me specifically. Okay? I like trading and having all my profits tax-free. Now, if you want your investments all tax-free and unlimited investments all tax-free, you have to talk to a tax strategist or a tax planner. Okay, Mikey, we can look at Siri tomorrow because we're past 11:30. 7,000 contribution. Again, see, 86 knows. He pays attention to that stuff. I don't. Okay, Ravi, we already looked at Intel earlier. I like Intel, but we're keeping our eye on it because it's not quite a buy yet. Good. How have you been? Haven't heard from you in a while. Hope all is great. Oh, it is wonderful on my end. Got to hang out with the kids today. My son had his very first Halloween party. That was fun. Okay, why does a stock candlestick pump really high as green and then show as really small red candlestick? Trenton, great question. Let's take a gander at it. DMZ, quick question. So I invested into Apple company 2 days ago, $100. So I invested in Apple 2 days ago, $100. Is it possible to make 10,000? Yeah, it is. But guess what? You're going to wait decades, generations even. Okay, $100 to 10,000 in Apple? Yeah, you got a long way to go. Sorry. Depends on the strategy you're using. Okay, so candlesticks. 4 things to look at on a candlestick. 4. 5. Okay, 5. Remember, I like fives? Fives. Number 1 is the color, red or green. Okay. And number 2, the top of the wick is the high of the day. Number 3, the bottom of the wick is the low of the day. Number 4, on a red day, the top horizontal line is the opening of the day. The bottom horizontal line is the close of the day. That's number 5. Green, almost the same, but a little opposite. Top of the wick, high of the day. Bottom of the wick, low of the day. Bottom horizontal line, opening of the day. Top horizontal line, closing price of the day. That's the 5 things to look for. That's pretty much on candlesticks. Okay? If you jump over and you look at a bar chart, okay, bar chart, okay, the top is the high of the day, bottom, the low of the day. The line, the horizontal line on the left-hand side is the opening price of the day. The horizontal sign on the right-hand side is the close of the day. Okay? See, a green day, open, close. Red day, open, close. Okay? High, low. Okay? High, low, open, close. High, low, open, close. Okay? Those are the only numbers you need to know. 5 things. Red, color, open, close, high, low. That's it. But I like looking at the candlesticks. Okay. All right, so let's keep on going. Wow, 41. Sell option means unlimited downside. That's not true at all. Selling naked options means unlimited downside. Okay, you got to get the terminology proper. Okay, if I buy a stock at $100 and I sell an option for someone to buy it from me at $100, okay? If the stock drops, I don't lose anything. If the stock goes up, I don't lose anything, okay? If I sell an option naked without a stock behind it to be covered, then there's unlimited downside. Okay, got to get the terminology proper. Most people, most beginning people lose money by improper terminology or hitting the wrong button. Okay, I am guilty of hitting the wrong button all the time. Okay, I lost money on AEO this year because I hit the wrong button. What do you usually do when you have an option and it's a few cents below the strike price day before expiration? I usually roll it forward. Will market close today? Market's already closed today. Closed at 4 o'clock. Trenton, he doesn't pay attention to earnings. Thank you, 86. Club Med Tom, what are scenarios that can occur on Friday and what are the needed actions? What can occur on a Friday? The world could end. Democrats might actually make sense. We might stop allowing men to enter in girl sports. There might be peace all over the world. There's a lot of things could occur on a Friday. You need to be more specific with your question. Damn, I missed it. All right. Have you... All right. Oh, wow. I'm at the end of the questions. Cool beans. Okay. So you have to buy 100 shares in order to sell the option. Bill S. 100 shares equals one contract. Okay, whether you're buying or selling is really irrelevant, but 100 shares equals one contract. Democrats make sense. Yeah, right. I'm going to take that as sarcasm. I need more of an in-depth detail of your strategy. Bill, you ready? Here we go. I'm going to go real quick. It is recorded so you can rewind it and listen to it over and over and over and over and over again. Okay, Bill, here we go. You ready? There are currently 9,757 stocks available in the stock market to trade any day. Half of those stocks pay a dividend, the other half don't. Capital appreciation for companies that don't share dividends for capital appreciation when the stocks go up. The other half pay a dividend, they share their profits. Those are the only ones I want to look at. More specifically, the companies that actually increase their dividends to the shareholders for more than 2 decades. That's 20 consecutive years. Higher and higher and higher dividends. Once we find out the company who is actually increasing their dividends, we stick all those stocks into a calendar that tells us when they're paying the dividend. Why? Because a dividend stock will increase in value just before the dividend is paid out. If we know that the stock is going to go up in value just before the dividend, we buy 2 weeks before on a Monday, allowing us to do a covered call, which is the safest, simplest, and easiest strategy to obtain a 1% or more per week. 1% or more per week is 50% per year. Now, we jump in and we do a covered call. So if I buy it at 100 and I sell it at 100, I collect 1% premium. That is 1% per week. I don't know if that was right. Was that good? That was in depth. Okay, just rewind it and play it slower. Anyway, it's past 11:30. You guys all have a great night, and we'll see you again here tomorrow. Bill, if you really want to learn, I'm here every single night, 9 p.m. until 11:30 Eastern Standard Time. I'm just turning off my cameras. All right, so you guys have a great day. All right, so catch you guys all tomorrow.